Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We're here for Monday market moves, what happened last week in the markets, and what I expect for next week. Alrighty, let's go to the charts. Starting out as always with the S&P 500. So this one's pretty exciting. Went up 1.5% for the week, so continues to surprise to the upside. I see a lot of support right here where this gap was, kind of where I've drawn this little rectangle. We'll call it right around 5,800 is kind of 57.75 to 57.25, somewhere in that ballpark. There's a nice gap right there, right where the 200 moving average is crossing up through. I see that as quite a level of support. Main resistance is going to be basically 6,100, just right up at all-time highs. So for next week, I see it's probably moving higher. The Dow Jones Industrial Average up 1.2% for the week, so finally broke through that 200-day moving average. Let me take a look at the weekly here real quick. Okay, yeah, we're above the 20 and the 50 on the weekly. So looking like the Dow Jones is probably going to go up next week. Is catching a little bit of kind of a triple top right here, but my money would be on the upside. And Tesla, the feud started and continues between Elon Musk and Donald Trump. Really interesting. Dropped 14.8% for the week and dropped that much in one day. It was pretty impressive, and then recovered a little bit on Friday. I thought about running an option to the upside on this. I'm recording this on Friday, so this morning, and everyone else thought the same thing. So this was not a deal, and I didn't do it. Everyone else also thought it would go up, and it did. But pretty interesting there. I ran a poll on Twitter just to see where everyone stood. Like, you have to pick a side. Which side is it? Team Musk or Team Trump? And 80% took Team Musk. Dow Jones divided by gold is changed about 0.2%. So it looks to me like the Dow Jones is probably going to changed 0.2% to the upside. So Dow Jones outperformed gold by a tiny bit last week. Probably going to outperform gold again this next week. It's right above this 50-day moving average. It's in kind of an uptrend. You know, I do fully expect over as time goes on, this gap will narrow and we'll get lower highs and lower lows, and this will go down, meaning that the Dow Jones way underperforms gold. But that is probably not next week. All right, and the DXY dollar is down by 0.2%, so probably going up next week. Let me zoom in here a little bit. A double bottom-ish, but that's a pretty bullish-looking bar right there on Thursday. It responded on Friday by going up even more, probably more upside next week. And Jordan says, hey, Steve, what's your educational background? Do you have an MBA or a bachelor's or anything related to finance? I'm sorry, I'm not laughing at you, Jordan. I'm just laughing in general, I guess. No, I do not. No, I've never been to school for finance or any of that. I realized as a kid that I have an affinity for games and patterns. And so that led me to poker. And then when I realized, like, wow, you can make money at playing games, like there is no better way, at least for me personally, than to put food on the table than by playing games. And that's exactly what all this charting is you're just playing a game. You're trying to figure out, you know, with probabilities, is this chart going up or is it going down? And if that's the case, what bet do I place to make money from it going in either direction? That's it. Like that's pretty much all I got. Maybe I should have gone to school for finances, but sitting in a classroom is just not fun to me, unless it's a classroom like at the Rural Classroom or someplace like that. All right, the 10-year yield is at 4.5% right now. Now, last week I said, watch the retracement here. Let's see if it comes down to the 618. That is my favorite retracement, is the 618 level. And it hit on exactly that and popped up. And check out what happened. I'll pull up the 20. Here's the 20-year yield. This came down on the 618 as well. I guess I could draw it, or, you know, just trust me. And it came right down on the 618 and on the rising 50-day moving average, shot right up, Came down on the 30, did the same thing, 50 moving average right up on the 618. So kind of an interesting level there. I fully expect these bond yields to continue to just climb higher, with pullbacks along the way. But yeah, I think that people are generally going to be moving away from bonds as they realize that inflation is outpacing the rate that they're paying. And 10-year yield minus the 2-year yield is continuing to go up, forecasting a recession. Just like this has been an excellent indicator of recessions. Once we cross the zero line, I believe we've entered into one, and we've probably been one. And a year or so from now, the Fed will recognize that, oh yeah, we were in a recession in the beginning of 2025. 1 month treasuries, I've been saying for forever, still paying 4.3%. Not the case anymore. Now they're paying 4.24. So finally broke this one right here, and I'm going to share my screen here as we go to our friends over at the CME Fed Watch Tool. And for their next meeting, June 18th, in 12 days, in 11 when you guys are going to be watching this, 99.9% of traders think that they're going to continue to pause. In other words, they're not going to hike rates, they're not going to cut rates. Apparently, one guy over here thinks that they're going to raise rates. Go out to July 30th meeting. Still, the vast majority of them think that they're going to continue to pause. It isn't until September that we get the majority of traders believe that the rate will no longer be 4.25 to 4.5. They're going to be cutting. So pretty interesting there. But yeah, you can start to see the breakdown right now is happening in the 1 month treasury, and boom, it just fell below. So there's some bond trader out there that made a pile of money from that. I asked you guys for recommendations on bond traders. Thank you guys. We got Jeffrey Gunlock, Manico 64, Michael Guyed, Warren Buffett, and Stanley Druckenmiller. All right, I'll try to get the last two on the show. We'll see if I succeed or not. That would be a bucket list for sure. But I'll definitely reach out to the first three. So thank you guys. LQD, I just checked the prices on these options right before the market closed. And maybe I'm spoiled because I got them for so cheap back here, but I'd really like to just see a spike up, maybe right up to this 200-day moving average, and they might actually get cheap again, but they seemed a little expensive to me. The Canadian dollar the US dollar divided by the Canadian dollar, so it takes right now 1.37 Canadian dollars to get you 1 American dollar. I see a fair amount of support around the 136 level. Been getting a lot of questions here on head and shoulder patterns. So I'm sorry, I don't remember who, but someone wrote in about this possible head and shoulder pattern. And I guess, so when you have a head and shoulder pattern, it's typically at the end of like a big run up. Okay. So like down here to up here, if you had a head and shoulder pattern, which is a bearish reversal pattern, once you get that pattern, it typically reverses back down. You want to see it kind of at the top, not as it's already correcting and going down. And on top of that, you also want to see, since it's in a rising price action, right? You typically want to see a head and shoulder pattern on a rise like this, and then it puts in the shoulder, and then the head, and then the shoulder, right? And then it reverses back down. Or you want to see that horizontally. Make sense? And the inverse is true for an inverse head and shoulder pattern. You either want to see it flat or you want to see it downward sloping, so that you kind of get the shoulder, and then you get the head, and then you get the shoulder, and then it reverses and goes up. So it's a bullish reversal pattern, right? So this one, although I could see how you could definitely think that this would be a head and shoulder. You got the left shoulder there, the head, and then the right shoulder. It's in a downward trend, and it's facing down. We want a head and shoulder pattern to be facing up and kind of at the end of the trend towards the top. Make sense? Okay. And gold is up 0.9% for the week. So broke above the trend line right here. That's pretty exciting. So we had this trend line drawn in for a little while here, and it broke above it on Monday and stayed above it. Pretty cool. So we're getting some bullish action here in in gold, although I think next week it's probably likely that gold is going to rotate back down. Yeah, just a little bit of a reversal. That's kind of a bearish looking bar on Friday. But it is looking to me like we're probably just going to get some bullish consolidation going sideways and looking really, really good for gold. We would just love to see this 200-day moving average just kind of catch it and then really be off to the races. But that may not happen. I just got a feeling we got like one more touch of the 200-day before we're really off to the races. You know, I think that would be a really, really good buy point. Maybe it'll happen. Maybe it won't. We'll see. But note that now that we have this trend line drawn here, that is going to act as a little bit of support. And it looks like it's going to line right up there with the 20-day moving average. So we'll see how that plays out. Next week's guest lineup. We've got Lobo Tigre. We have Rick Rule, we've got Greg Weldon, and we rescheduled Garrett Goggin, the junior gold and silver miner guy. So be sure to get your questions in. That is in the posts tab, or if you're signed up with us on our free newsletter, there'll be links in the newsletter, so you just click on those and go right over. I will also got a busy week next week. I will also be over in the Rule Classroom doing another chart session on Tuesday at 12:30 Pacific time. Had to reschedule the one from last week. And then I'll be interviewing Rick Rule on Thursday in the classroom as well. So I'm not taking any questions for Rick, so you won't find a post here on this channel for Rick for next week. I'm no longer taking questions for him for this show here. All the questions that you want for Rick, go over to the Rule Classroom and submit them there. So the agreement when I joined the Rule Classroom was that all the questions for Rick have to go through the Rule Classroom or there's no incentive to sign up, right? So link is in the pinned comment below for Rule Classroom. Just go over there, sign up. It's free. You can even get a free app on your phone and any alerts that come up. All of us are on there all the time talking about different companies, and Rick comes on and gives his opinion. It's probably the best free program like as far as education, that there is. So join us in the classroom. It's free. And if you're a serious investor and a little more dedicated, there is a premium version in the Rule Classroom Plus. Links are down below. Oh, and Adrian Day will be on next week as well in the Rule Classroom Plus. So looking forward to his presentation. All right, and gold divided by silver. Let's see, it's at 0.56. We'll round up right here. So it basically takes about 2 ounces of gold to get 1 share of the S&P 500. Actually, I guess that would be 2 ounces of gold to get 1.1 share of the S&P 500, something like that. But we have broken out of this trend. Gold should outperform the S&P 500 here going forward for the foreseeable future. Although for next week, I could see a little correction. Double bottom, well, that's a tough one. Yeah, if I had to bet on it, I'm not, but if I had to bet on it, I would bet that this chart would go down. So the S&P will probably outperform gold next week. Just for the short term, CEF up 3% for the week. So if you're new to the show and you're like, I need to get myself some gold and silver, this is how you do it on the stock market. Easy, click of a mouse bet here. And these are your entry points, $28, $26.50, and $25. And I set these up so that it's kind of like, okay, maybe you put 10 or 15% of your position on here if it reaches 28, and then you put another, 35 or 40% position on here when it hits 26.50, and then you put your last big bet on if it hits 25. Like as this gets cheaper, your conviction should get higher, assuming the narrative hasn't changed and assuming that our government hasn't balanced the budget, which they're not doing, then the deal gets better by more, okay? And not CEF, just did that one. PHYS is up 0.5% for the week. So a couple weeks ago, we hit the red line. So congratulations. If you're brand new to the show, we got a lot of new subscribers. That is your level, $24.25. After that, 23, and then 21.50. Like those levels for PHYS. This is your physical gold on the stock market. And if you want the miners, GDX is up 1.9% for the week. So kind of looking here like we might get a little bit of an island reversal. So what these are is when you have a gap up like this. So see how it just gapped up right there? There's a gap, and then it goes up and comes down. Now, wouldn't surprise me at all if on Monday the price action started right here and then started going down. That is an island reversal. And if I was really on it on Friday before the market closed, what I would have done is I would have bought a put and probably made it pretty short duration, maybe something like, I don't know, late July, maybe early August, something like that, to try to capture that gap and basically sell it next week. But I was not as on it as I could have been, and I missed that. But that would be my money, as I think this is probably going down. All right, GDXJ is on the other side of the paper, up 5.6% for the week. So, this could iron out to be an island reversal. We'll see. Just a gap up here. But if GDX is going down, this one's going down even harder. And Franco, Nevada is down 0.9% for the week. So watch the retracement here. Watch for a retracement down to the 618, which is going to be this second blue line right here. And kind of a sweet setup here. I mean, I don't think I would really buy this. But, if you have no Franco, Nevada, and you are just itching to buy something, this wouldn't be a terrible point to do it on the 618 right there on the 50-day moving average. If it hits that and bounces up, that could be like your starter, like 5% position or something. But I like the 155 a lot more. And then I like this rising 200-day moving average even more than that. All right, and Gold Royalty Corporation had a wonderful breakout right here. So we've had this parallel channel drawn for, 6 months, 8 months, and finally broke out to the upside of that. I had this white line here as a general line of resistance. It tapped right around there and then bounced down. Not a coincidence. If you go back here on the chart, you can see it hits around there in June of 2022, October 2022, then back here, March 2023 there, and then all along here in about a year ago here in 2024. So debating taking profits up around this $2 zone, although I think we got a lot in the works here for Gold Royalty Corporation. But I mean, RSI on the daily here is 75. I wouldn't fault anyone for taking profits here right now. Origin Royalties is up 7.2% for the week. So I'm going to watch the 200. What am I watching? Oh, anything I think below right here, this yellow line is a deal. So anything 130 and below is a deal. Had a nice shoot up right here on Origin Royalties, but I would wait for a pullback here for it to come back down. But it is interesting here. I mean, it's kind of a bullish wedge or bullish pennant right here that looks like it's playing out to the upside. So if that's the case, let's just do a little TA here for funsies. And we got the pull and kind of a bullish-ish pattern right there, or pennant, right? So we basically take the pull, go from there to there, and then we'll take the breakout, which just happened, and this could go as high as $1.70. So we'll see. But I'm going to wait for the deal to go through. I expect a pullback here in this stock and triple flag when that happens. And when that does, then I will buy more. And where are we? Oh, that's why it went up, because Rick just did an interview with Patty Nickel. People bought it. Okay, that's why. All right. Barrick Gold is, let me bring that back. Barrick Gold, lost my place here, up 3.4% for the week. So watch this 200-day moving average, okay? So just shot up right here, almost got to the $21 mark, came right back down. I'd be interested as maybe like your first little starter here around the 200-day moving average. And then after that, 17.75, 16.25, and 15 and a quarter. And Newmont down 0.7% for the week. So I still really like the this 48.50 level right here. I think that will line up nicely with a lot of things. We went over this last week. That's our favorite retracement, the 618. So that's why I drew it there. And on top of that, you got this rising 200-day moving average. and got a few questions from Richard and a bunch of other people. Steve, love the show. Thank you. I believe Newmont has put in a 7-month long cup with handle pattern. Okay, so rising up here. So basically we want to check from the last bottom, like how far does the cup actually retrace down. Ideally, you kind of don't want it to retrace more than 50%. I kind of give some leeway to like 618. Like, you know, you can find patterns in anything, but it just becomes like, well, how certain can this actually be, right? And you know, the further it gets from 50%, the less certain you can put on this, right? So the less certainty. Okay, so we'll say it went past the 618. Well, that's my cutoff, but we'll give it that few weeks that it was down past that. So what he's basically saying here is we've got this right here with a possible handle coming out, right? Right? Everyone can see that. So I suppose you could call this a cup with an ironing out handle. Maybe this was the handle right there and then it shot up. We'll take a retracement here from the bottom of the cup up to the top right here. And we ideally don't want it to go past the 38.2. It did for a hot minute, but it can't go past the 50%. If it goes past that, then you're pretty much just negated and it's not certain enough to even bet on. So I suppose you could have a quasi cup and handle right here. I don't know that I would really bet on it. You know, I would pretty much just be looking for like this 61.8% retracement right here on the 48.50, which would put you about where the handle would be anyway. So you know what I mean? I would just look at that and the rising 200-day moving average, and I would go on that more than I would on the cup and handle. But good eye, Richard, and everyone else that gave him a thumbs up and commented. So I'm going to be talking about all these patterns in my video series that's coming out. I'm finalizing it right now, and it is a lot more work than I thought it would be. So I thought it would be out a while ago, but it looks like another week or two. All right, Agnico Eagle is flat for the week. Put in almost kind of a picture perfect double top right here. Let's see what that is. So the high rate there, 126.75 and a half, and 126.65. Okay, so 10 and a half cents from each other, and you know that was a month and a half apart. So pretty impressive. Probably the same guy had the same limit order in, right? Or limit sell, I guess. Yeah, pretty impressive. I'm definitely going down next week. That's my bias. My bias on most of these gold stocks is down next week. Yeah, I don't see any buys on this, but I do like the 105 level for an entry, 95, and then 85 for the backup, the truck. And B2 Gold up 8.9% for the week. So this option is just working out fantastic. And I would have kind of wishing I would have taken a shorter duration one, you know, like, I mean, I went 2027 on this thing. So I am up 60%. So that's cool. It's what we call the first world problem. But I don't know. Now I'm kind of torn here because we hit my resistance line like almost exactly. And if this thing does what I think it's going to do and goes up to $5 here in the next like few months, then I'll be very bummed that I sold. If it hits this resistance line and comes back down, I'm going to be very bummed that I held on. So that is what we call a first world problem. And Equinox Gold is up 4.7% for the week. No buys right now, just ran back up to the top of this parallel channel, hit right back down on Thursday and Friday. I just still like buys right around this rising 200-day moving average, which is right around $6. Basically just buy this one on pullbacks, buy it on pullbacks. G Mining Ventures down 7.8% for the week. So it looks like we're going to hit this red line again. So I know a lot of you got in right here at $13. Those of you that didn't and want in, you're extremely likely that you're going to get a shot at that on Monday or Tuesday, and that'll be at $13. After that, 11 and then 9.50. And Rio 2 up 4.75% for the week. So had a moonshot there on Wednesday, looking really good. They came out with an announcement. It basically looked like all the votes passed and everyone on the board is staying there. So I'm not really sure why that was so bullish, but or in question. But anyhow, shot up and then corrected back down just a little bit. Maybe it's just a news release was all it took. I moved these lines back up again. You know, I think where I had them, they were just pretty much all pipe dreams. And so now I think that we're probably back in the realistic zone. Like, you know, I look at the green, it's like a 15% chance of hitting, you know, a stink bid. You know, yellow is probably 50-50. And then this red line is probably like a 75-80% chance of hitting, right? Something like that. Okay, yeah, I'm not selling anything, waiting for construction to finish and first pour to commence. And silver, story of the week, up 9.4%. So just a massive move here in silver. Looked like we had a little baby bull flag right here. You know, can't go too much down here by this and not a very certain one, but man, it absolutely just crushed it. Just broke way out. I had a feeling that silver was going to break out, although I did not know that it was going to put in almost 10%. So looking fantastic. This is significant. Okay, so this is the highest price that we've had in silver since February of 2012. Okay, so I got to go out to the weekly just to see it. Okay, so way back here, right? Highest price since February 2012 and highest weekly close since September of 2011. So we're making history here, boys and girls. The next resistance is going to be this one right here, and that is 37.58. Is that right? Yeah, 37.58 is going to be the next resistance. So, I'm getting all sorts of questions. Do I buy now? No, you buy back here when we were talking about it 3 years ago, when the all-in sustaining cost for silver miners averaged $18.50, and silver was trading down here for 17 and change. That's when you get in. You get in down here. I'm not a breakout guy. I do not know when to buy when things like break out, because okay, there's that bar right there. Well, look at this one over here. Okay, so it had similar price action, similar bar right here, right? Look at that one. Okay, and shot up, higher high. Oh, it's breaking out, and then it just goes down and sideways and does nothing for years until it finally gets back up to that price point, right? So this was like February 2021, and then this is April 2024. So it took 3 years for it to get back up there because you bought the breakout. I'm not that guy. I'm the guy that finds the triple bottoms and the double bottoms and tries to get in cheap and then sell expensive. I don't look at this as a buy at all right now. If anything, I might be trimming a little bit, but look for the ones that are down here, right? And then when it's all in the news like it is now, because it's up here, that's the time that you sell it to everyone else. Okay, so we'll come up with some right here shortly that will be cheap. Gold to silver ratio, this one went the opposite way that I thought it would. I thought we were going to have a pretty good breakout here up to the upside, possibly up to a ratio of like 120 or so, like kind of back like we got in COVID. No, did not happen. Even though we had this pennant here, generally speaking, when you have a pattern like this, it'll break out to the upside. This one did not. Corrected straight back down. Last week, it was 100 ounces of silver to 1 ounce of gold. Now it is 92.6 ounces of silver for 1 ounce of gold. So it went to the other side. Silver way outperformed gold this week. PSLV up 8.1% for the week. So I moved these lines up now. So green line is at $10, yellow at $10.50, and red starter position is at 11 1/4. And just breaking out, looking fantastic here. Is this all-time high? Oh, no, not even close to all-time highs on this thing. Never mind, disregard. But a big breakout right here. We had a double top right here, and then coming up on a triple, might even be considered a quadruple top if you count both of those, and then just broke right out. So looking great for silver and silver equities. And SIL up 12.1% for the week. So silver miners ETF, leverage play on silver, right? So silver was up 9. This one's up 12, okay? Took a little profits here, moved past the point of concern, okay? So we got in down here when it was 20 bucks, 28, what is it, $23, okay? Got in over here, 25, and then 23, right? And now we're taking profits here. Took some right here, and also took some right here at almost $50. So now whatever we have in this stock is free. I would like to get back in, and I think I'll get that opportunity. When it comes back down here to these lines, I will add more and rinse and repeat the game. SILJ is up 4.7% for the week. So move these lines up. Red line at 13, yellow at 11.75, green at 10.50. And also took some profits on this one. Looking fat. Oh, darn it. Why did I move that? Undo. There we go. Right back where it was. And took some profits on SILJ as well. Usually gap ups like this don't sustain. You got an RSI of 74 in the daily. Super stretched. But, maybe it keeps going. So I didn't sell everything. That's for darn sure. I think I sold 15%, something like that. Pan American Silver, same kind of thing here. So this one right back here that everyone got in when they bought Mag Silver. I know a whole bunch of you bought in right here, right when it hit the 22.50. Me as well. Lined in perfectly when they picked up Mag Silver. Deal hasn't gone through yet, but I'm sure it will. And shot right up. So if you are a trader and this was your trading position and you got in, you were up over 25%, and that is only since 3 weeks ago? Just saying. What's the little I don't know emoji? Right? I mean, you got in on that thing, and now the RSI is up at 70, 71. I really debated taking profits on this because I've had this $28 mark drawn for a long time. I decided not to. And one thing that really played into that was the fact that they bought MAG, and now they're going to be one of the leading silver miners on the planet. So that was one thing that, but anyone that wanted to take profits like right here, I don't think now is a bad time at all. Okay, and James says, thoroughly enjoy your content and information. Thank you, James. Inspired to dig into trading again because of you. May the wealth flow in your direction. Cheers, mate. You as well, James, and everyone watching the show. Thank you. Super grateful for you guys. And yeah, I like making money. If I can help anyone else along the process, then let's go for it. So how can you support the show? First and foremost, you can hit the like button and then share this show with anyone that you think needs to hear it. Right, so your buddy that's buying all these altcoins and stuff, that might be the guy that could probably hear this message the most. Subscribe if you're not already, and if you're going to use some of the products and services that I talk about on the show, like TradingView or anything else, there's links down below, and those are affiliate links, so it doesn't cost you any extra. You support me, you support our editors, you support our families in the process. There's also a donation link from PayPal. Down below, you can donate. You can also join our free newsletter. That supports the show because although it's free for you, if there happen to be any links in there of things that interest you and you happen to buy, then that also gives back to the cause. So thank you guys for your support. We are forever grateful. Just glad I get to do this for a living. It's a lot of fun. Copper, paging Dr. Copper, up 3.7% for the week. So, really want this to go down more. I'd love to see this correct back down to the to this white line. Every time we have a big pullback in copper, like we did back here when we got more, and back here and back here, I keep wondering, is this the last one? Like I've been hearing about this recession that's going to kill copper for 2 years, and it just hasn't killed it. Copper just keeps this steady climb up, so I don't know. But buy pullbacks in copper. And this is gold divided by copper. So last week it took 709 pounds of copper to get 1 ounce of gold. This week it takes 690 pounds of copper to get 1 ounce of gold. So this is a pretty interesting bull flag pattern here. So look at this. So you got low RSI right back here, right? So right back, end of March, boom, way down there. shot straight up. Let me draw it here so we're all looking at the same thing, right? Right there, boom, boom, almost a 90-degree angle. If this plays out and goes, that means that gold is going to radically outperform copper, which would kind of make logical sense. I mean, if we're going into a recession here, it would make sense that a monetary metal would outperform an industrial metal, like a lot, right? So that would make a lot of logical sense. So we could have a pretty, and that could be accomplished, you know, a couple of ways. It could be accomplished by gold going up, copper doing nothing, or copper going down, gold doing nothing, or kind of both, like copper going down and gold going up, which would make the most sense to me. But I mean, if we measure this flag pattern out, I mean, it can get kind of stupid. And although 700 pounds of copper probably sounded pretty stupid for an ounce of gold, you know, back when it was in the 400s. So, you know, who's to say it can't get even more stupid if it were to break out right there? I mean, you're up at like the 900 level, you know, so 900 pounds of copper for 1 ounce of gold. I mean, that just sounds nuts, but the charts are showing it's possible. So we'll see. All right, COP.U, this is physical copper on the stock market. And so if you're going to establish a copper position, I think this is easy and the safest way to do it. Up 3.1% for the week. So basically $7 is a buy, $8 if you want to play this 14% arbitrage game that I drew out last week. That's how you do it. And you sell at $8. But don't too many people do it because I am too. So that might grenade this bet. COPX up 5.1% for the week. So last week, it broke through the 200-day moving average, but it could not close the deal. This week, that yellow line right there is the 200-day moving average. Boom, gapped up on Monday and just off to the races. So fantastic. Copper's looking great. Thank you. Liberation Day gave us some amazing deals right there. Red line on COPX. So this is going to be the easiest beta way you're going to play copper, right? A copper ETF. You know, this thing has like 2 billion assets under management, super liquid. You can run options on it. You know, you can buy puts, sell puts. You can, you know, run covered calls. You can do all that on this thing. Okay. So real easy way to play this and super, super liquid. COPJ is up 7% for the week. Someone got lucky up here at like $25. So just a smoke show to the upside, right? Now this one, in conversely to COPX, COPJ only has 13 million assets under management. So limit orders only on Friday. They only had, what is that, 7,250 shares traded that day, okay, as opposed to COPX had 819,000, okay, so really 819,000 or 7,000, okay, so limit orders only here. You can buy market orders in COPX, I think, all day long, and you'll be fine, yeah, there you go. Okay, Freeport McMoran is up 7.8% for the week. I wrote delete red arrow. What does that mean? Oh, well, we're still in a downtrend, but let me just kind of, okay, we'll kind of do a loose trend line here. You know what? Let me do a white line just so that I keep things consistent. Okay, so loosely drawn, that's actually really loosely drawn. Okay, forget this trend line. No, not valid. But it does kind of look like we're breaking out to the upside a little bit here. I mean, we're up above the 200-day moving average, okay? Like that a lot. Yeah, I think we might have had a little bit of a reversal pattern here. So we kind of hit out of it right up here, rejected the 200-day moving average. Liberation Day gave you the deal of the century, and then now we're kind of coming back up. I think we might have to draw a different arrow here, boys and girls. I think we might have to draw, where's our little arrow tool? No, this one, no. This one? Arrow. That one? No. This one? No. This one. There it is. All right. Now we're going to do that, and then we put it in green. Boom. I think we have an uptrend here. We'll see. Getting kind of high on the RSI, but I do like that it broke above the 200-day moving average. All right, Monduro Capital up 2.2% for the week. Still seems to be putting in a floor right here around 13.3 cents because I drew that white line. And uranium is down 1.8% for the week. Now, this is just the spot price here, so don't get too, don't get too excited. I don't really see anything here on the chart or anything other than I think down here in the low 60s is the floor. Now, gold divided by U308. Okay, so this we talked about the last couple of weeks, and this one is a pretty good example of a head and shoulders pattern, right? So we're in an established uptrend, okay, and we're at the top, right? And now it's a reversal pattern, so we've got this neckline right here, right, is flat or slightly angled up, okay? And then here's the left shoulder, here's the right shoulder, and here's the left shoulder, and then it broke down and then didn't play out. It was kind of a false breakdown, right? So these patterns, think of them as probabilities. Just because you got dealt pocket kings doesn't mean you're going to win, but the majority of the time you will. So I guess you could say that this pattern kind of played out because it did break down, although it didn't break down quite to the measured, target that we would expect. You would expect that just a way to place a target on this would be from the top to the bottom right there, and then you extend this down to the neckline and down, and it didn't get down there, but it got down about halfway. So it's not, this isn't exact, but it is, it's a good reference point, right? So just because something's going to hit 70% of the time doesn't mean it'll hit every time. All right, SRUUF, the Sprott Physical Uranium Trust, down 0.1% for the week. Zooming in here, this is a pretty bearish bar on Friday. We hit right there on the 200-day moving average, got rejected and shot right down. Just couldn't really close the deal on any one of these to break above that convincingly. Still 66.2 million pounds and at a 5.8% discount. So nowhere near the discount we need to get into this thing. Did have a breakout of the parallel channel here. We'll see if that actually means anything. So the upper end of this parallel channel now is going to be acting as support. And but going by the action on Friday, I would guess it's going down. All right, and Cameco up 3.2% for the week. So kind of looks a little bit like a bullish pennant, kind of like a little wedge right here. You guys can probably already see it. So it just shot up and then right there and like that, which is a bullish formation. But I mean, I can't bet on something to go up when the RSI is 75. But if that's what the pattern is and it plays out, that is a bullish pattern, but I would not be able to place that bet at all. All right, URNM is up 4.2% for the week. So formed a little baby double top right here. So it just came right up there, came back down, and then right up there and coming back down. We'll see if it holds above this 200-day moving average. I don't see any buys right now. I don't really see any sells either, although we've done pretty well in this the last few weeks. I want to wait and see if this holds above the 200-day moving average. And URNJ up 5.7% for the week. So hit the 200-day moving average, got rejected. Hit the 200-day moving average, got rejected. We just needed to break through that and get on top, just like we see here on URNM. And then that will be a lot. That will be a big soap bubble of support right underneath it. And UROI is up 5.9% for the week. So this one convincingly closed above the 200-day moving average. Absolutely fantastic. I debated taking some profits here and just decided against it. I think my mark is going to be this $3 mark here for Uranium Royalty Corporation. And on top of that, we've got the Rural Symposium coming up. There's always a lot of uranium bulls out there. Might get some more buying pressure here on Uranium Royalty Corporation. Same with Uranium Energy Corporation, up 5.7% for the week. So now it broke above this 200-day moving average. Let me get this out of the way so you guys can see it. Hitting right there on the 200-day. So closed below it for the week. A little frustrating there. Yeah, I don't really see anything on the weekly that makes me excited. Yeah, don't really see any tradable patterns. RSI is 59. Yeah, no buys, no sells. We just need to see it close above the 200-day moving average. URA, this one, I don't own the stock anymore, but I took a put out on it, went right after all that bullish news on uranium. And apparently I should have closed it like 3 days later because that was the only time I was up on this thing. I think I was up like 20%, and I'm like, no, I want more than that. And that's what you call getting greedy. So last week I had this drawn that the expiration date on this put was 5/20, which made no sense because I bought this put on the 27th. So that means it would have expired before I bought it, which doesn't make any sense. It actually expires in June 20th of this year. So I got another few weeks on it, but I really need this to like go down like tomorrow or it's not really going to be worth much. And let's see, Oklo. Okay, so Andrea and Davis want to know about Oklo. Now, this one, okay, and got a bunch of thumbs up. Okay, so 7 billion market cap. Quite a bit of this is closely held. There's quite a bit out here that is also a free float, so like 75% free float, 25% is closely owned. Just looking at the statements here, operating expense, I mean, they have no cash flow. You know, I don't really see a huge draw to this thing. I mean, this is either going to be a home run or it's not. Maybe this will do really well, but the risk that you're taking compared to just buying something like, you know, UROY or URNM or even URNJ is tough to articulate. Okay, now the questions came in as far as, is this a cup ironing out right here? Okay, so what I like to do is so a cup and handle's got to be in an uptrend, and we go over this in the TA series that's coming out. It's got to be in an uptrend, right? And typically, I like to take it from the last uptrend. So see how it's kind of flat right here, and then it goes up? That's kind of where I would, because ideally, you would want the cup to come back down about 50% right here and then go like that, right? Okay, well, let's say instead of using that, we'll use the very bottom of the of this last run up. So instead of putting it there, like we'll stretch it and put it to there. Okay, now it's past the 50%, past the 618. I mean, hell, it's almost down here to the 78%, 78.6% retracement down here, right? So, okay, let's say that is it. If that's the case, then we'll put this here and put this here. And then now, where is the handle ironing out? Okay, so we don't want the handle to get down below 43, and it cannot get down below 38. So that would make the cup go like this and up. And then ideally come down right here. That's your purchase point. And then off to the races. But it can come down as far as this, and then that's your purchase point and off to the races. I mean, I think true technicians would like buy the breakout as it broke out up here. If you really believe in this company and you know a lot about it and you follow it a heck of a lot more than I do, then, you know, maybe that allows you to buy this point or buy this point right here, right? But I don't really follow this. It was just way too risky for me when I looked at it, and I'd rather just play the general equities and just play it a lot safer. But, you know, to each his own. If that's what you want, that's where it would be. But this is very, very loosely, like I wouldn't look at that as a cup and handle. I would try to find some other pattern. Okay, hope that helps. All right, where are we? Oil is up 6.2% for the week. So this is WTI, getting kind of exciting right here. So we're coming up on this. Basically, the number I'm looking for is like 65.40. I want to see what the price action looks like when it gets up about another $1. I'd like to see a reversal bar to the downside. Then I'm going to bet on oil going down. And Brent is up 0.3% for the week. So, wow, WTI really outperformed Brent. Okay, and gold divided by crude oil is, last week it took 54.5 barrels of oil to buy 1 ounce of gold. This week it takes 52 barrels of oil to buy 1 ounce of gold. I'm rounding here. And XLE, kind of like purchases on this upward channel red line right here. I mean, if you have no oil position, this is basically like, let's say you have no oil, right? So new guys, you like, hey, oh yeah, I got 1 or 2% of my portfolio in oil. Like if you have no exposure to oil and gas, like at least in my opinion, if you care, I think that's a mistake. I'm at 15% of my portfolio, and I think 5% of that is in Exxon. So, yeah, I think oil and gas are pretty cheap right now, and especially for like, a lot of you guys are getting close to retirement and stuff, those dividend stocks. To each his own. All right, now this one is a 2X bear ETF. So this is the one that I'll bet if it looks like crude oil is going to go down, and this is a 2X bear on the XLE ETF. All right, be sure to check out our free newsletter, as the name would suggest. It's free, so there's no spam. I'm not going to sell your email to some marketing company or something. It's just you and me, one email once a week, comes out at 10 a.m. Pacific time every Sunday. It's a summary of all the guests we have and this weekend show. So it's a one-stop shop for the plan for next week and all the links for our future guests where you submit your questions. Link is going to be in the pinned comment below, or go to stevebartonmoney.com and sign up there. Anyone that didn't get the newsletter last week, we had a little glitch in the matrix, but everyone should be good to go now. And XOM, so ExxonMobil up 1.9% for the week. I think now is fine for an entry, although I like 102 a lot better, and it will probably hit, so why not put that limit order in? And Chevron up 2.6% for the week. Now is okay, but I like 135 a lot better, so why not just put that limit order in? And it's very likely to hit. And Padre says, Steve, loving the content. Thank you, sir. Appreciate that. And Garrett says, inflation saved me from a lifetime of complacency. I like that. Yeah, it's pretty easy to just buy bonds and collect your money, but when inflation outpaces that, then you're just going to lose. And Canadian Natural Resources up 4% for the week, so still in a general downtrend, hitting the 200-day moving average and rejecting. I got a feeling here pretty soon we're going to break through that and be on to the upside. Blackstone Minerals up 2.4% for the week, so move the yellow line up here to 1350. Green line still at, or I guess I moved the yellow line down. It was at 14. Moved it down to 1350. I think it's a deal now. But it's looking a little bearish on the chart, like it might actually touch down at 13 again. Natural gas up 6.7% for the week. So, no. Natural gas up 9.8% for the week. Kind of hitting on a little bit of a triple top right here recently. Got the rising 200-day moving average. That is a huge level of support for it. And Devon Energy up 6.7% for the week. So it's a deal now. Now is fine. I just put the first order here at $30, and I think it will probably hit. And Birchcliff Energy up 6.3% for the week. So went even higher, although we got a bearish reversal bar here on Friday. So price action is suggesting that it'll probably go down. Move these lines up, so we no longer have the $3.15 stink bid, which just was not going to happen. It's $3.75, $4, and $4.35. And Pado Exploration and Development is up 4.5% for the week. It's hitting some serious resistance now. Okay, so going back to 2022, we're hitting in the same price points. I moved up these lines up to the next level. So first limit order at $12.50, then $11.50, and then $10.65. And thermal coal is up 2.2% for the week. Met coal is down 2% for the week. And our favorite coal ETF starting to look pretty bullish. starting to look pretty bullish here. So it came up. I would not call that a flag pattern. I'm sorry, I forgot who asked. It's just, see how it's just too rounded? We want to see like, and on top of that, it's kind of in a downtrend and then it reverses up. Generally speaking, like bull flags, you want to be moving up, kind of like in a cup and handle. You want to upward price action, bull flag up, that kind of thing, right? This to me just looks like it's being caught by the 50-day moving average and trying to stay above it. Fingers crossed. Still 15.2 million assets under management and 890,000 shares. Apparently there's options coming available on these things, although I'm not sure how, because like if you look at the action on Friday, only 6,000 shares traded. All right, and Glencore is up 1.7% for the week, so got through the 50-day moving average, just kind of putting in just this general upward channel trend line right here. I should probably draw this to be a little bit more like, not really a trend line, but generally in an uptrend now. I think we found the bottom in Glencore. And AMR is down 1.3% for the week, so looking still like it's trying to iron out a bottom here. And BTU, Peabody, up 0.6% for the week. I don't see any tradable patterns here. This kind of looks like the coal ETF, and that it's just trying to iron out this 50-day moving average right here and stay above it. And platinum, also, if silver was the story of the week, then platinum is its little brother. It is up 10.7% for the week. So we've scheduled Ed from the WPIC, which of course stands for the World Platinum Investment Council. He's coming on the show in less than a month. I cannot wait. We are going to pick his brain on the PGMs, the Platinum Group Metals, and PPLT, the way you bet on this in the stock market, up 10.6% for the week. So these starter positions down here, hopefully those are now pipe dreams. 85 bucks, 83 and 80 that we were talking about for the last 2 years. I think that ship has sailed. I am really hoping that this is it, and what we've been waiting on forever is finally going to pay off. So I think I've got about 3% of the portfolio in the PGMs. Might be a little more, a little less, but right around in that ballpark, fully expecting a double. We'll see if that actually happens. And Palladium, same kind of thing, up 10.7% for the week. So yeah, just knocked it out of the park. Palladium's going up right along with platinum. They're both above $1,000. Platinum's approaching its mining cost of its production cost of almost $1,200, and palladium is $1,064 to close out the week. And PALL, the way you bet on palladium in the stock market, up 7.8% for the week. So yeah, these starter positions of 85, 83, 80, that may be a pipe dream now. Hopefully it is, and we are off to the races. We shall see. And SPPP up 7.7% for the week. So congrats everyone that got in on this at $9 back here on Liberation Day or December of last year. Before that, your patience is paying off. All the questions about do we trim here or not? Man, that sounds like a personal decision. I'm not. The reason I got into this thing was for a massive double, and I think it's coming. I hope it's coming. I mean, we had a moment just like this back in October of 2024. So, you know, this was 8 months ago, and it was the same question. It was like, do we trim now or do we hold fast? And I said, hold fast, and look at what happened. We're not even back to that level yet. So this could be another one of those. I'm really hoping it's not, but I do expect this fund to vastly outperform here in the future, and that's kind of what I'm holding on for. But wouldn't blame anyone for taking profits here. All right, and platinum divided by silver. This is what really gets me excited and keeps me from selling any platinum yet, is this chart right here. How many ounces of silver does it take to buy 1 ounce of platinum? And right now that number is 32. But, you know, just back in like 03, it took 150. And then here in 08, it took 120. And then back here in 2010, it took 90. And then for quite a while, I mean, basically from 2013 until 2019, it took double what it is now, you know, so pretty interesting ratios there. Same here with gold, okay? It now takes 1 ounce of gold to get you 3 platinum coins, okay? And before it could take two platinum coins to get, two gold coins to get one platinum coin. So quite a reversal there, right? This could, I mean, if it does that again, that's a 6x, in relation to gold. So I'm holding out. All right, and Silver Magi says, I took my profits in Impala and Sibanye-Stillwater, so those are miners of platinum group metals. He said, I took my profits in those when I was up 60 to 80% in a short period. I'll buy back in once they drop a few bucks. Yeah, that's the way to leverage those, is on the miners. The problem is when the metal is doing terrible, those are doing even worse, which has been the case for a very long time. And nickel still holding that $15,000 floor. NIKL, the nickel miners ETF, up 1.6% for the week. Regretting not buying down here at $7.50 when I was debating, because now it's up to almost 12. We are above the 200-day moving average right now, which is amazing. That looks fantastic. I hope it continues, although with an RSI of 79, that's probably not. Centaurus Metals is up 9.3% for the week. So still in the, I guess we're kind of in the bottom-ish part of the channel now. Not quite to the middle line yet. I like buys on this lower blue line right here around 21, 22, 23 cents. We're up at 27, 28. I would wait. And the Bloomberg is up 3.3% for the week. So last week I said it broke the 200-day moving average, which was a bummer. It looked to me like it was going to probably continue down, and I said, I might hold out here for the 618 level. Never happened. Just absolutely gapped right up, blew through the 20-day moving average and the 50-day moving average, then closed right below, right in between them, and then shot back up above them, both to close out the week way up 3.3%. So like the Bloomberg a lot. I don't like a buy now. We're kind of coming up on like a bit of a triple top right here, but if it came back down to the 200-day moving average, yeah, I think that'd be an interesting entry point. Maybe you can catch a triple bottom here on the 50% retracement, but I kind of doubt it. I think it'll probably get caught by the 200 there. Iron ore is up 0.2% for the week. So kind of at the lower end of this range here. Maybe we get to 92. We shall see. Recession indicator like copper. BHP is up 1.2% for the week. So, yeah, I moved the lines here. Red line at $48, yellow at 42, green at 40. Might need to spread those out a little bit, like bring the yellow line up. That was kind of an anomaly with Liberation Day. And the PIC ETF is up 2.5% for the week. Yeah, above the 200-day moving average, looking great. I don't see any buys right now. Buys were back down here on Liberation Day, but looking good. And it pays a nice little dividend. I like it. And Bitcoin is down 1.1% as of the recording of this show, but by the time you guys listen to it on Sunday, who the heck knows where it's going to be. We've got a quasi head and shoulder pattern here. So general uptrend, although not a very established uptrend right here. So, we kind of want to catch it at the top of a real uptrend, like it's been going up for a while, and I find them to be much, much more accurate. But a bit of one, and you can kind of see the left and then the right, and left, head, and then right. But I'm not, now that I'm drawing it, forget I even said that. Okay. What do I see here? Okay, catching the 50-day moving average, coming, I see more downside than up, honestly. It looks like we might be rolling back over in Bitcoin. I could definitely see us going down to 94,000. Got quite a bit of support around 94, 95,000. You got the 200-day moving average down there. It looks like the technicals are rolling down, so my bet would be that by the time you guys are watching this, it will be lower. And we did a deep dive with Alan Hubbard into Bitcoin last week. So if you missed that episode, definitely check it out. I told my Bitcoin story there. And before talking with him, I was a bit of the mind that this was tulip mania. And now I'm not so sure. And I'm certainly not buying at these levels. and I have no plans to buy more. But I'm not closed off to the idea like I was before after talking with Alan. So I don't know. Interesting. You know, if Bitcoin were to get completely washed out and the fundamentals were still the same, I might actually consider buying some. Although I'm not interested at all at these levels. Alrighty, well, I hope you guys got something out of that. Be sure to sign up for the newsletter, the free newsletter. It's in the pinned comment below. I hope to see you over at the Roll Classroom, and be sure to submit your questions for next week's upcoming guests. Go to stevebartonmoney.com for more, and have a wonderful rest of your day.